Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the massive breakout that is happening right now on Bitcoin. As you already know, Bitcoin rallied to $123,000 last night, and there are two major questions that we need to break down in this video. Number one, where is the top for this cycle? And number two, should we be going into long trades right now, or have we rallied too far that we need to slow down and be a little bit more cautious? We're going to break down all of that today. I hope you enjoy it. So without much further ado, let's go ahead and dive right on into it. Bitcoin over the last week has seen an enormous breakout above $112,000, exactly as we were expecting, although it did come early. We predicted earlier last week, in fact, about 8 hours before we broke above 112, that Bitcoin would rally to between $118,000 to $125,000 in the month of August. That then went ahead and happened almost immediately. You can see in this chart and in this tweet, about 4 hours before we broke all-time high at 112, we predicted that Bitcoin would go into this box between 118 and 125 in the month of August. It proceeded to happen within a week, showing just how incredibly bullish Bitcoin is right now. We're going to talk about a bunch of different charts today, but the first thing I want to talk about is how far is Bitcoin going to rally and what should we be expecting? Well, that chart is obviously a little bit outdated at this point, so I've added another one onto my Twitter profile. If you're not following me on Twitter, @CryptoJeb, you ought to come follow us. We got a lot of charting going on over here, but I posted this morning on stream. Bitcoin is most likely heading to between $135,000 to $150,000 by the end of September, although it could be sooner, as happened in the first tweet. Then a correction down to 100 to 112, followed by a decision about whether to break the long-term uptrend and go into bear market or hold it and go into super cycle. I put in bold here, 4-year halving cycle theory to be tested this Christmas. This is the chart that we took the screenshot off of, and this is the chart in our trading view. I want to break it down for you because there's a lot to talk about here, and it's actually extremely important. As you know, we have seen this massive inverse head and shoulders pattern building all year. Bitcoin had a corrective movement back-to-back test $100,000, and we also backtested the 20 weekly exponential moving average right here. At that time, we had a bounce off of the 14 interval moving average on the daily chart, on the weekly chart RSI, and we broke higher. It was the most obvious setup that we have seen in years on Bitcoin. We went 20x long, we made a bunch of money. We bought hundreds of thousands of dollars down here below $100,000, and then I bought hundreds of thousands of dollars more Bitcoin between 100 and 110 because it was that obvious. I put my money where my mouth was on this breakout to the tune of well over $300,000. And I am very glad I did. And this is where I think Bitcoin is going next. What I think is going to happen is Bitcoin is going to continue to follow this inverse head and shoulders pattern, and we are going to watch that send us to one of 3 different levels. And I want to break those down. We've got a bear case, a base case, and a bull case, and I'm going to break each and every one of them down. Our bear case is that before the end of September, Bitcoin will rally to $135,000. We get that price prediction based off of a conservative method of extrapolating the inverse head and shoulders pattern. That inverse head and shoulders pattern has a much higher price target if you extrapolate it the way you would normally extrapolate a inverse head and shoulders pattern. But I want to show you where it would be pointing if you used a more conservative method of price targeting, because we want to get a nice range so that we can really get an idea of what zone it is that Bitcoin is going to reverse at. If we take our inverse head and shoulders price target just like this and extrapolate it off the bottom of the right shoulder instead of the breakout, we're breaking protocol. This is not how you pull an inverse head and shoulders pattern price target, but we're trying to be more conservative. Then we can see that that would give us a price target right here at $135,000. Once again, we pull the price target from the shoulder line, the neckline of the inverse head and shoulders pattern down to the bottom of the head. Typically, we would pull that off of the breakout point, which is right here. But we're going to do a more conservative call. That's pointing at $135,000, which really puts our recent high of $123,000 into context. It really doesn't make a lot of sense. Like $109,000 made sense. It doesn't make sense if you look at the price, but if you look at the market cap, Bitcoin basically peaked out at exactly $2 trillion market cap. There was a big even there. It made a lot of sense. If you look at the market capitalization here, I'll just show you the last year. Guess what? When Bitcoin went up to 109, we were just a little bit above $2 trillion market cap. So it made sense that we were having a big breakout to that point in time. $123,000 doesn't make any sense. There's not really any major level there. It doesn't make sense for a multitude of reasons. Number one, the inverse head and shoulders pattern also gives us a fib extension. Here on the regular chart, not even log, but on the regular chart, 1.618 Fibonacci extension gives us a price target of $131,000. That lines up perfectly with our base case. The bull case up here, not the bull case, but the next level, 2.618 on fib, is $167,000. $137,000. So $135,000 seems like the base case for this rally. That also stands to reason when you consider the fact that the way we're pulling this is basically just the way you would pull a bull flag. If we go to a clean chart here, which is hard to find on my trading view, but we'll just go ahead and make one. If you pull a clean chart here and you draw this movement right here as a bull flag, then that is actually how you would do the price targeting. You would draw it just like this. And that's again pointing at 135,000. So our base case is $135,000 on Bitcoin. Our bull case is that we don't actually see the price target based on the bull flag, but instead we draw it the way you normally would an inverse head and shoulders pattern, which would be something like this. You have the inverse head and shoulders pattern right here. You have the neckline right here. And you pull the price target just like this, and then you would extrapolate it off the breakout, not off the bottom of the rally. That gives us a price target of 150, which brings this line right up here. I know it's a bit of a mess. I'm sorry. That brings this line right up here into context. So far, what we're doing is we're more or less drawing a green box that looks something like this. We're looking at a green box like this, and this is more or less our price target. If you just kind of shoot that down the middle, you could say 140 is about a base case. So you're looking at a bear case of 135, a bull case of 150, and this also makes sense for another reason. If you rally from the bottom of this movement of $74,000 up to $150,000, that's 104% movement. Well, that's the exact same size of movement that we saw in the last cycle. We saw 108% movement. 100% rallies are starting to become the norm for post-Bitcoin ETF rallies. That's the next point I want to talk about is the ETFs. I need you to remember the gold ETF. I talk about this a lot. You're probably tired of hearing about it, but I don't care. It's useful. The gold ETF sent gold parabolic. In fact, it had this uptrending channel. Gold broke bullish out of it, right? From the beginning of the ETF, 2,500 days later, gold would rally 320%. Now, I've told you this statistic before. Gold had $1.5 to $2 billion of inflows in the first year. Bitcoin, in its first year, had $38 billion of inflows. Coming over here to Bitcoin. Bitcoin had $38 billion of inflows in its first year. That's enormous. And we're also seeing literally billion-dollar days of inflows. The other day, on Thursday and Friday, we had $1 billion of inflows both days. That's spectacular. BlackRock at this point is managing over 600,000 Bitcoin. Massive, massive, massive portfolio. Within the first 2 years, gold saw inflows around $5 billion or less. In the first 2 years, after the Bitcoin spot ETFs, you're likely going to see inflows coming close to $100 billion. You will probably see another $30 billion of inflows by next January. So it makes sense, therefore, that we would continue seeing major rallies like what the last one was. The last major rally was 100%. A 100% rally on Bitcoin this time would be pointing at $150,000. Okay, cool. Let's take a look at this from another perspective. If you look, once again, we'll go on a clean chart here so you can see what we're talking about. I've got chart vision, right? I can see all this, but it is a little bit hard to manage. If you come on a clean chart, you can draw a trading channel just like this. You have your uptrending level of resistance, your uptrending level of support. Have you seen that recently? Yeah, it looks a lot like what we saw on gold back in 2000s, right? We saw this uptrending trading channel. Gold just had this stairway to heaven after the ETFs launched because ETFs are such a big deal. People have been talking about Bitcoin ETFs for a long time, and they should. It's important. Gold had 1/23 of the inflows that Bitcoin had, and it stairwayed to heaven all the way up, 320% in 6 years. If Bitcoin rallied 320% in 6 years off of the beginning of the ETFs, which were right back here around 50K, first week of January 2024, if we rally 300 and something percent by 2030, you would see like a 350% movement, right? You'd see Bitcoin go to 225. Well, that doesn't make any sense. We're probably going higher than that, right? The Bitcoin ETFs have been far more successful than the gold ETFs. Well, that's where this staircase comes in. By the end of the decade, these two trend lines, if they hold, and I honestly think they will continue to be relevant for the rest of this decade, you're seeing a base case of $250,000, a bull case, once again, end of the decade, you're looking at a bull case of $400,000 or higher. And so that gives us some context about what's going to happen over the rest of this cycle. You see, the 4-year halving cycles would stipulate that we would be seeing the end of the cycle at approximately November. Now, I'm not going to go to the trouble of pulling up the charts right now, but I'll tell you why. It's because we normally see the bull market last about 400 to 500 days post-halving. We're getting there. 400 to 500 days post-halving would be about November of this year. And that would line up with us hitting 150. But is 150 the top of the bull market? Well, that's where the correction will come in. After we hit this uptrending level of resistance here, As you can see, we're most likely going to have a correction. If we see that correction coming back down, we're probably going to test the 100 to 112 region, which is going to be an excellent buying zone. If we go back to 100 to 112, we will be retraced between 25 and 35% from all-time high. The further you get away from all-time high, the better the buy. It's that simple. And so at that point in time, we have to decide, are we going to hold 100K and go into a super cycle because of the ETFs? Or are we going to break 100K and go into bear market because of the 4-year halving cycle? That's something that we need to debate. I want to hear your perspective. Are we going to go into a 4-year halving cycle bear market, or are we going to go into super cycle because of institutional adoption and the spot ETFs? I'm personally starting to entertain the idea of a super cycle. We'll see. We don't know yet. But when we test $100,000, which will probably happen later this year, if it even does, it might not. We might just go parabolic to 200. That's possible too. That's why I'm buying even at these levels, knowing that it could go down to 100. I'm still buying at 120. I have entries at 122. I'm not ashamed of it. I don't care. I got entries at 73. I got entries at 5,000. I couldn't care less. I'm holding for 15 years, whatever. But the point is, if we go back down to 100, that's the test. If we hold 100, super cycle. If we don't hold 100, bear market. If we drop below 100, 100x short, right? For the short, just for a little bit, right? But if we hold it, super cycle might be happening. You might be looking at $200, $300, $400, $500,000 by the end of this decade. Prepare accordingly. Now, let's talk a little bit about the short term. Down on the 5-minute. Now, of course, this video is going to be going out about an hour after I launch it, but something I want to point out to you, this correction, much bigger than this correction, right? I kind of explained it like this on stream, and I like that explanation. If you are an invading army and you start here, this is your home territory. We'll call this HT for home territory. We'll call this ET, not the extraterrestrial, enemy territory. You start in the home territory and you invade the enemy territory. The further you get away from your border, the longer the supply lines and the harder it becomes to maintain an offensive. Jeb, where are you going with this? Well, first of all, I'm a history nerd, and I just love incorporating that whenever I can. But more importantly, the further you get away from your border, the longer the supply lines get. What happens to the soldiers that are right here, the troops that are right here? They're thinking, we're right next to home, whatever. We'll fight really, really hard. We can just dip right back into friendly territory. We can dip right back into the bunker, right back into the trench. Yeah, whatever. Who knows? We'll be fine. We'll be very bold. The further you get away from enemy territory, the more you start thinking, the further you get into enemy territory, the more you start thinking, oh crap, if something goes wrong, I'm screwed. So you start getting more cowardly and the offensive ends up slowing down. That's exactly what's happening right here. Bitcoin's home territory was under 112. We built a ton of support down here. So Bitcoin rallies up to 118. Everybody's bold as a lion because you're only going to be down like 4% because you're going to bounce off of 112. By the time you get up to 123, people are starting to get freaked out. And I'm talking the experienced traders. They're saying, we've rallied a long way at this point. Bitcoin has added $300 billion of valuation, $200 billion of valuation in a week. We're overextended. Our supply lines are overextended. And what ends up happening is people say, okay, if this cycle high is 135 to 150, the closer I get to that, the less possible reward there is and the more possible risk there is, which makes it make less sense to go into a buy. And so as we get higher, it makes less sense to long. It makes more sense to hold. I longed every single one of these 4 major impulse waves up. I longed this one, I longed that one, I longed that one, and I longed that one last night. All 4 of them. Longed every single one of them. Made profit on all 4 of them. I'm getting more skeptical because of this correction over the last several hours, over the course of today. I think, first of all, that the end of this rally is going to most likely take place between 135 and 150, but I also think that the ascent is going to slow down. We've seen that happen recently. Massive rally, slows down, stops, crashes. I am slowing down, winding down my lump sum purchasing on our investment portfolio. Again, I put hundreds of thousands of dollars in down here. All of it's in profit. Winding down my lump sum investing, starting to stack cash, cycling out of buying, cycling into cash. Not selling, but I'm holding cash more so as we approach the top. Because I would rather buy on a possible dip down to 110 or 120 then buy at 150 and then watch that investment drop 20%. So that's my 2 cents. That's where I think Bitcoin's going. I think we're going to 135 to 150. I think that the road to 135 to 150 is going to slow down a little bit. I also think you're going to start to see more larger corrections, 2, 3, 4, 5%, where you can get stopped out and liquidated if you're trading. So beware. I'm not saying don't long. There's plenty of setups, but just be more careful. And if you're looking to invest, I am starting to believe that you're going to see these levels again on the downtrend rather than on the uptrend. So consider putting some of your income into building a cash position right now, rather than just dumping it all into the market as we have been doing for like 6 months now. Now's the time to start building a cash position. I was so glad in January when Bitcoin was up at 109 that I was sitting on about $200,000 of cash. And I sat on it until we dropped below 92, and I started buying down at 74. And I was able to do that because I stacked cash when we were at the cycle top, not the bull market top, but the cycle top. And then I was able to buy on the way up on the next rally. I'm winding that down, starting to stack cash again because that top's in view, and then we're going to be prepared for that. Those entries down there around 110 to 112, maybe 120 during the next corrective movement. So that's my 2 cents. I'd love to hear your opinion. What do you think? And if you enjoyed today's video, make sure to do something for me. Did you know that we actually have our own Discord server now? It's called the First Cohort Trading Group. Last night, we were trading this entire movement. We made a big old win. We did 21%, about 22%. This was just one of the exits. Last night, I traded this live at about 11:45 at night. The breakout above 120. We traded this here. I gave a bunch of wisdom. You can kind of pause and see all the stuff we talked about. We had a great time, made some money with our trading group. A lot of people in the group said that they really appreciated it. People are joining the group. Just a minute ago, we had 3 people join the group. So shout out to these guys who just joined. Guess what? You can get into the First Cohort Trading Group and join and trade with me in 2 ways. Number 1, you can sign up and pay with cash. Use coupon code JEB20 right now to do so, and you will get money off of the first month. You can get 20% off of the first year or 20% off the first month by using coupon code JEB20. That said, if you use our link and sign up with 2Bit and you deposit $100, then you can sign up for the yearly plan and we will refund you the first year. I will give you the first year, 12 months in the first cohort for free. All you got to do, sign up for 2Bit, deposit $100, and in good faith, tell me that that's where you're going to do your trading. I want you to move your trading here. It's a great exchange. It's what I'm trading on because it's a great exchange, and we'll give you the first year for free. So sign up for 2Bit, sign up for the first cohort, get the annual subscription here, deposit $100 into 2Bit, and we will give you access to the first cohort for the first year for free. Also, don't forget to check out the Cryptocurrency Technical Analysis Academy, which for a limited time only is 20% off using coupon code JEB20. This is not going to last long. I'm probably going to end this next week. So if you want to get into the Cryptocurrency Technical Analysis Academy, join over 5,000 students learning technical analysis in dozens of videos, over a dozen hours of content. Then make sure to sign up for the make sure to sign up for CT2A, make sure to sign up for the first cohort, and make sure to sign up for our beautiful exchange of 2Bit with the link in the description box down below. I hope you guys enjoyed today's video, and I will see you guys in the next one. Peace.